So from a thematic perspective, as many of our investors and clients will know, we've had quite a weak rand positioning for some time. I think structurally the backdrop to the currency remains a poor one, in the sense that South Africa's economy remains under pressure. We think there's a great risk of a downgrade toward the end of this year. But in the very short term, there appears to be a bit of a groundswell of momentum in the other direction. So the rand has strengthened fairly materially in recent weeks. And we think, certainly if you look back to last Friday, this was driven by, or it was given an extra impetus by the Bank of Japan moving toward a negative interest rate policy setting. And what this ultimately does is it keeps the carry trade quite alive and well for yielding currencies like the rand, along with many other emerging markets. And we think this is why you're starting to see some strength. At the same time, just prior to that, you had the Reserve Bank governor raising interest rates in South Africa by 50 basis points. And that's obviously given the market some confidence that the Reserve Bank remains independent in the context of South Africa as a sovereign nation. I think one of the issues that's on our mind right now is the extent to which the short-term strength might become more sustainable. It's obviously resulted in a lowering of the cost of capital in South Africa. You've seen the bond yield coming back quite strongly, the 10-year bond yield coming back quite strongly from its lows of about 10.5 in December post the Neni dismissal, down to about 9.2% currently. And a lot of the domestically focused assets like the banks index in South Africa have performed quite strongly on the back of this. So you've had your cost of capital coming down, a bit of rand strength coinciding with that, and that's pushing up the share prices of the banks off a very, very low valuation base. We've had the sense for some time that the banks are probably in a value trap type of scenario, but clearly if the cost of capital comes back further, you may well find that justified valuations actually rise somewhat. So that's something we're looking at quite closely and thinking about quite carefully, especially in the context of the banks offering apparent value at forward 7 or 8 PEs with 7% dividend yield.